Hold up. Park it. Kick back, spark it. Welcome to the spot where money talks honest. Yeah. This is Gosh Talk with Bill Haase. Real life money in your front seat. From the paycheck to the profit. Turn that I don't know to I got this. Gosh Talk with Bill Haase. Blueprint stacked on the workbench. From the hustle to the harvest. Learning what they never really taught us. So if you're tired of the fine print winning, slide a chair in, that's a new beginning. We keep it straight, keep it smart, keep it classy. You're tuned in now, Gosh Talk with Bill Haase.
Hey, welcome back to Garage Talks with Bill Haase. I got a special guest today, Tom Lundell. Now, Tom has to, he's got a rough life because he's got to live in Hawaii, as opposed to this beautiful state I live in of Illinois. And now I'm probably going to get taxed for saying that. But Tom, welcome to the show. Appreciate you coming on. Tom and I know each other through a veterans networking group. And he gave a little talk the other day about what he does. And it is extremely interesting. And someone who's been in finance 40 years, he perked my ears up. So I had to get him in here. So, Tom, welcome to the show. Fill us in. What is it you're passionate about? What's your business?
Well, I appreciate it, Bill. Thank you for having me. So I'm with a company called SoundMoney. And for the last 5 years, I've had the privilege of helping people understand the why behind owning physical gold and silver. And not to bore with all the details of history, but there's a big reason that gold and silver keep showing up. If you look all the way back, no matter how far you go, gold and silver are the only through line throughout all of history. And that's where my passion is, to help people understand why they should have it, and then hopefully give them an easy way to do it. Save it.
You know, I was thinking of you this morning in that particular line about how it's been with us for so long. When I was having breakfast with a banker friend of mine, and he was actually had a concern about, well, I heard in 6 or 7 years, currencies may not be worth anything. And I'm sitting here going, oh, you need to talk to my friend Tom and get back to the gold and silver status. And like I said, you perked my ears up, and I'm definitely interested in having a deeper conversation with you about this, because there was some interesting. You were showing percentages that gold was up and silver was up. You want to kind of fill us in on that?
Yeah, I've done some side by sides looking at different markets, but specifically gold and silver, because I'm not a financial advisor, but I really consider myself more than anything just an educator, and trying to help people understand the value of owning it physically, and then, like I said, give them a way to do it easily. But yes, I did share a little bit about how even the last 30 years, the stock market's done really well. I was roughly up over about 800%. But in that same 30 years, both gold and silver have seen over 1,000% gains. And people are often surprised by that, and I was too when I started to crunch some numbers. But it really comes down to, Bill, I think that the reason that we save silver and gold, this is going to sound strange, is that it's not that we would get wealthy from having it. And even though technically, in comparison, let's say, to other ways of building wealth, we could. But the main reason that we own it is because it's not the dollar. That's the key. The key is that the dollar, by definition, is technically not real money. It's a currency that we use, the government's kind of put in force for us to use to buy goods and services. But the key thing it's missing from being considered real money overall is store of value. And because our system, and you mentioned about your friend, our system is built on debt. And in order to keep it in force and to keep it moving, they have to keep increasing debt. And they have to, in a sense, print more dollars, and create them out of thin air, right? And so
Up to 36 trillion times
we,
extra.
right, right. So just helping people understand that is my ultimate goal, and to say, yeah, it's strange to say it's not to get wealthy, even though it can do that. It's more that you're finally saving something that is outside that system I talked about, outside that system
Yeah.
of debt, and you're really protecting what you've worked so hard for to earn.
It's lower risk
Yeah,
than investing in the stock market. It has higher returns. Common sense tells you right away that's a nice combination. And the fact that dollar bills are their notes, right? And so I carry those in my wallet, and I spend them freely far too often. But I'm not going to carry a bar of gold in my pocket, and nobody's going to have change, if I need change. So effectively, it can help you reduce your spending desires. Whereas having dollar bills in our pocket, we have a tendency to have that mindset. Well, where can I spend it? I got
yeah,
to get rid of this. I
sure.
don't like carrying money around. I want to spend it. I don't know. A lot of people don't carry cash much anymore, but I typically try to, just in case of emergencies or something. But people don't think about it. Do I get the gold and the silver from you, and I have it mailed to me, and then I'm going to have to figure out a way to store it somewhere, and make sure it doesn't get stolen, right? So that's a concern I would have. Um, I actually have a friend who has a safe in his house, but only one I know. So what are a couple of the options that people have if they want to own silver and gold?
Where you kind of referenced, I think, some of the things that people are challenged by. When if they've ever looked into it before, they've seen, whether it's the price becomes an intimidating factor. Gold being $5,000 an ounce. Storage concerns you mentioned. Uh, the convenience. Being able to access an account or liquidate if necessary.
Yeah.
And our company, when they started, their whole goal was to eliminate all of that friction, all of that, what made it not very user friendly, if you will. And so,
Hmm.
what we give people the ability to do is save as little as $1 at a time. So, in a sense, you're acquiring it fractionally. So you're able
Yeah.
if your budget is $10 a month, or you're willing to give up Starbucks for a day and say, I'm going to spend $6 on gold instead of coffee, or somebody has, a little bit more means and they want to put more significant amounts, that really gives everybody a chance to acquire. So that's part one. Part two would be for those that have storage concerns. We offer private vaulting, and there's no charge to that. So that's free as well. Versus a lot of companies out there say, "Oh yeah, we do vaulting as well for our customers or clients," but then they charge significantly for that. So we solve that
Mm.
problem. We just make it free. And then the liquidity is instantaneous. So there's no, games or gimmicks, right? It's like, you're going to get fair value, and when you're ready to sell, if that be 2 a.m. in Illinois or that be 7 p.m. in New Zealand,
Hmm.
wherever you are in the world, and you need to acquire more or you need to sell it, the Sound Money platform gives you the ability to do that, and it's fully insured for those that are taking advantage of that free private vaulting. Fully insured by Lloyd's in London. And then I think the other point you made, for those that say, "Oh, I really want that. I finally got to an ounce of gold, and I really want that ounce of gold in my hand," they simply click a button, and it'll be on its way via FedEx. And they just pay the shipping and the insurance at that time, if they ever choose to take that option.
Yeah, that is interesting because if for some reason I needed cash, and I'm sitting here and I have 2 ounces of gold, um, it's not like, you know, my first thought is all right, how am I going to turn this into cash? I can go to a pawn shop. I know I can do that, but am I getting a fair price? I don't know. What is fair market price? How do I find that? I know how to. I've been in the trading pits for many years, so but most people don't. And you know, what can I go to a bank? I don't know. Where do you go to cash in your gold if you're sitting on a physical aspect of it? And I get the feel of having that in the physical aspect is probably a very nice feeling. Um, but not if I have like 100,000 of it in my house. Then I'm not feeling as good about it. But so I like that no cost vault because you know that can eat into profits, right? When all of a sudden now we can trade without having to pay brokerage fees, which we paid for years and years and years, which really cut into your profits. If you have a financial manager, you're probably paying a management fee, and that's a percentage based on assets under management. They're called AUMs, and most people don't realize that when you add those fees in, and then you add in the cost of living, and let's say the cost of living is 4%, your fees 2%. Now you're 6% behind on your investment before you even get going. And so you're eliminating that aspect. I love that. And I can use your vault and I just hit a button. I can cash in and you send me the money. Yeah. Can you send it right to my bank account?
You can. Yes, you'd have the option of having a check issued to you, or you could link a bank account and have it just sent back to your bank account. So, and you brought up a good point, like having gold and silver. Obviously, my main message would be it's important. It's important, I think, to have some. But if I did have a physical ounce of gold in my hand right now, and let's call it $5,000, and I need $1,000, I don't need 5,000, I need 1,000. And this is what I had to use. I would be, in a sense, forced to give up the whole ounce of gold, turn it all into dollars to now have that $1,000 I needed. With Sound Money, if I did utilize the vaulting option, same scenario. I need $1,000. I simply liquidate $1,000. I still own the other 80%, if you will, of that ounce to be safely stored for a future need that I might have. But I'm not having to give it all up at one time. And that's where I think that advantage, if you will, is helpful.
Yeah, I love that.
Yeah,
I love that because if I have to liquidate $5,000, I'm going to find a way to spend $5,000.
very true.
Now I have no investment, right? So I like that, and the fact that you can start for $1 and build over time. I would imagine it's not like you have to sign up for, I'm going to pay $50 a month, and you're coming knocking on my door going, hey, it's that time of the month to pay me the $50. It's pretty much a free for all and wide open. I can just add money at any time I want, subtract money anytime I want.
Exactly right. And it's all in your
Okay.
control. You can literally make $1, like a thousand $1 transactions in a day. There's no limit to how many transactions, how often you do them, when you do them. There's no minimums, nothing like that. It's really meant to, like I said, give everyone. I like to say, no matter what someone's age is, no matter what someone's wage is, and no matter what stage they find themselves in life, that Sound Money hopefully gives them a solution that they've really always been looking for, just didn't know about it till now. And then they finally have a way to be able to do it.
I mentioned to you when we were in the green room before that I've been in finance for 40 years, and what the way you brought this subject to light the other day was the uh, best way I've ever seen, and I'm sitting here saying, man, why did I never really buy into that? The value and the point and the purpose of owning gold and silver, having that as part of your portfolio. Um, and now I'm sitting here saying, how can I shout out to the world? This is important. This is a really smart thing to do. I think you showed a chart where silver was up over those 30 years about 1,400 and some percent.
Mm-hmm.
Am I right there?
Yeah, I mean, obviously the number can change on a daily basis. That's true, but yeah, that when we're looking at the last 30 years, for example, you're looking at the stock market's done quite well. I mean, it's up roughly 800 plus percent. But in that same period of time, gold and silver have seen over 1,000% at least, right? You know, gold is a little lagging, a little behind silver because silver's had these huge jumps lately. But yeah,
Yeah.
you're seeing that really. I guess it comes down to diversification, right? It's saying that all of the different things I could consider as being part of my investment portfolio, play an important role. You know, gold and silver, I think, fall in line to where I'm not only building wealth, but I'm really protecting purchasing power. And I think the other illustration that probably grabbed your attention is that, and this is I think to get this picture around our mind, is that in 1965, a brand new Ford Mustang was only $2,500. It's hard to believe that, but it was $2,500. And 1 ounce of silver and $1 at that time were worth exactly the same, right? You could have $1 for
Okay.
1 ounce of silver. And you could, in a sense, go into a Ford dealership and say, I'd like that brand new Ford Mustang, please. And give them $2,500, 2,500 paper dollars or 2,500 ounces of silver, and you'd since be giving them the same thing, and drive off with that brand new car. Now, imagine this. Imagine that there were 3 safes, and in those safes were 2,500 ounces of silver, 2,500 paper dollars, or a 1965 Ford Mustang. And you now open those safes all these years later, these 61 years later. What is that $2,500 going to get you towards a brand new Ford Mustang? You know, maybe the tires, because now those Ford Mustangs are $37,000.
I
That
don't think that's even enough to lease the car.
not even enough to lease the car. But that 2,500 ounces of silver, crazy enough, Bill, is that would get you 5 new Mustangs at today's value of roughly $37,000 plus each. And it's that
Yeah.
ability for the protect purchasing power that I think that through the years of the way that maybe the government's told the story and tried to build this confidence in the dollar that's always losing purchasing power, that we've
Yep.
lost that as part of the education, if you will, in our society.
The dollar absolutely loses buying power on an annual basis, and whatever the cost of living goes up, that's what the dollar value loses. But I want to point something else out. When you talk about stocks being up, let's say 800% over the last 30 years, that doesn't mean you as an investor in stocks are up 800%. You're not even close. Because the reality is you weren't in the right stocks that went up that brought it up that much for the time frame that you needed to be involved. So the odds of you having your portfolio that high over 30 years is extremely unlikely. Of course, there's always the one-offs. There's those stocks that if you'd have bought Microsoft when it first came out and Google and all those others, but but again, and people should understand that 90% of stocks are owned only by 10% of the people. So, because I listened to a gentleman speak the other night on a news show, and he goes, well, the stock market going up is showing you how great the economy is, and because people are, getting benefited by that. And the news guy goes, well, how? And he goes, well, everybody's in 401ks. It's like, no, maybe half of the country is involved in a 401k, and most of those 401ks are likely under $1,000. So you're not getting those great returns. And again, when 10% of the people own 90% of the stocks, guess who's getting wealthier? Not us little guys. But if you have that gold and that silver, you realize that true percentage of increase in value. So there's a big difference there. And I really wanted to point that out. I want people to understand that and the differences between different types of investing, without even going too deeply into the risk value aspect of it. But I also wanted to point out before I forget, it's sound.money. So if you go on the internet and you want to check this out, you go to sound.money, and it should pop right up. And there's some good information on there. And Tom is an amazing representative. And like I said, I'm sitting here saying, knocking myself for not having this as part of my portfolio. Not that I have this big, broad portfolio that most people might think I do, but I don't. Um, uh, and so I'm going to be talking to Tom. I guarantee you that. And looking into this and telling my family about it as well. But what are some of the concerns that people come to you about when they want to talk? First of all, it's very hard to get somebody to come talk about money, right? We all know that. And especially when now you're talking about something that people don't necessarily look at investing in silver and gold as a portfolio thing or as an investment. What are the concerns that people come to you with?
I think generally speaking, what's come up most often is inflation. People are saying, I didn't understand inflation until the last 5 or 6 years, and it now has become very real for me. And so they're thinking, is there a way to safeguard, if you will, themselves against the ever-present inflation? I think second to that would be people that, as they are approaching retirement, or already in retirement, and they're thinking, I feel like I'm taking some risk I really shouldn't be taking in the marketplace. Is there, what is gold and silver going to offer me, to give me peace of mind, if you will, that my savings will be there for me 10 years from now? The illustration I've told Bill, and I don't think my wife will mind me telling the story, because to me it illustrates it well. And this is no slam on the stock market, but it's just like you were kind of pointing out, the reality that there are some underlying risks that we take. And I don't know if you recall, but I'm sure you do. When they started talking about in 1999, they were saying this Y2K thing was going to happen. And I remember our advisor at the time said, well, what do you want to do? And we were obviously a lot younger then, and we said, well, we're a little concerned too. We don't know what's going to happen. So we put it all in cash in late 1999, rolled into 2000. Seemingly nothing happened. Y2K didn't happen. No glitches took place, and the computers were fine. And around February of that year, 2000, he called and he said, well, what do you want to do? You're still in cash, basically. And we diversified into 20 different companies, up and comers. These companies are up and comers.
Yeah.
And
I got a hot
we
stock
thought,
for you.
we're not going to take too big a risk here by diversifying with 25 different companies.
Yeah, I love that word
And
too.
in 3 days, we lost 86% of that retirement account to the dot-com crash, because a lot of those up and comers went from yesterday's news to today's, they're no longer in existence companies.
Right.
And it's, I bring that up mainly two things. One is, yes, that's some of the risk we take with that type of investing. You can have some winners, but you are going to have some challenges along the way too, and that's just inherent of that. Gold and silver, like I kind of mentioned earlier, that even though we build wealth with them and they can do quite well over time and have proven to do so for really thousands of years, the main reason we're doing is they do not carry that inherent risk. They have what they call zero counterparty, meaning if you own it physically, then there's no party that says that they have claim to it other than you. And there's nobody that, in a sense, has outside influence on it to where they can, in a sense, make a decision, so to speak, that's going to
Yeah.
cause that to become a zero. Like those companies that I referred to, they literally became zeros forever because of what they were, and who were the decision makers, and so the peace of mind, I think, for me and for others that might be, as you kind of the question you asked about the people and the questions they come to me with, is saying, I don't want to do that. I don't want to take that much risk. When I was younger, maybe I would have, but now that I'm at this stage of life, I want something that I know is going to be there for me tomorrow. It's still going to be there for me 10 years. And it's a tool that I can use for my future, that I can rely on. And that's where I think we make the difference and help people there.
Yeah, I like that. I mean, you made me think of a couple of stories. One, I used to visit my father, my parents were retired in Florida, God rest his soul. But we would go out and play golf, and his buddies would take off, and they would race home afterwards. I'm like, where are they going? What are they doing? They were going home to check the stock market to see how their money was, and I'm like, they all have a lot of money. I said, what are they worried about, and why are they in the market? I mean, it's money was controlling them. And I talk a lot about how money controls. But and then you made me think of another story back in a little date called Black Monday, October 19th, 1987. I was very much a part of that day when the market dropped 22.4%, which at the time was only a little over 500 points, but it wiped companies out. It wiped people out. People were jumping out of windows of buildings, off bridges. Um, why take that risk? There was an advisor company that used to teach its advisors. I don't know if it does it anymore. Used to teach them that to understand the value of a long-term investing and sticking in the markets. They say take the periods from 1970 through 1999. Add up the 30 years, divide by 30, and you said your average rate of return was 14.84% return. And I said, well, that doesn't work. And he goes, what do you mean? I said, well, money is not numbers, and numbers is not money. Like, what do you mean by that? I said, put $1 million in January 1st, 1970. Pull it out at the end of 1999. Your average rate of return was only 5.24%. So if inflation's going up 4%, you're paying 2% fees, you were actually losing money, and you were keeping it at a huge risk, like a 1987 crash. We call them corrections now, but they were called crashes back then. So, and here, this is where I'm just trying to prove that the value of silver and gold, you wouldn't have had those risks, and you wouldn't have taken any of the losses. Um, yeah, I'm sorry to hear about that story for you in the 2000 coming back, because same thing happened to me in the housing bubble. I lost my home. I made what I thought was a brilliant move that turned out to be not so brilliant. Um, but and now there's talk of an AI bubble. We do bring these things upon ourselves, but again, you got to look at sound.money on the internet and check this out. Tom, how can people get a hold of you if they have more questions?
Well, I'd be happy to share my contact information. Hopefully, we could maybe somehow insert it. But my phone number is 808-721-3041, and you probably looked that prefix up, and it's like, oh, where's that? That's Honolulu. So I've been here for 36 years. Married my lovely wife. She was a local girl. She's who kept me here, and we've been married for 33 plus years now, and 5 kids later, you get pretty planted somewhere. So,
Yeah, that's awesome. Hopefully I'll be able to see you. I'll be in Oahu, which is, I know, a different island, June 22nd or 23rd, and hope to be there for a few days doing some work with the military. But I've never been to any of the islands. Um, And quite honestly, my wife and I never had this. It's not on our bucket list. But so I'm going to have a good experience, and I'll come home and tell my wife, maybe we have to come back. But is there an email address people can get you at?
Yes. My email is, it's a Hawaiian word, means straight and narrow. It's Pololei, P-O-L-O-L-E-I, management.com. Or at I'm sorry, at gmail.com. Sorry. Yeah.
At gmail.com.
Yeah.
Polollie.
L-E-I, sorry.
L-E-I.
Management.
That's right, Hawaiian. Management.
At
okay.
gmail.com.
At gmail.com.
Yeah.
Okay. Well, we'll get that out there. I mean, folks can, fortunately, they can hit replay
That's true.
or go back a
That's
bit,
true.
and so they can get the information if they really need it and really want it. Because again, go to sound.money, and I'm sure you'll be able to find information there as well. But what are some things that most people don't even but most people don't know anything about when it comes to gold and silver? Is there anything that's kind of hidden jewel?
Wow. Yeah. They're like the hidden treasures, if you will, of gold and silver. Yeah. What comes to mind for me most often, Bill, and I may have said this a little earlier, but years ago, 30 plus years ago, I was in the insurance industry, and I'd be talking to, let's say, a couple that was 35 years old at the time, and they had dreams of retiring one day. And then, what age would you retire? 30. I'd retire at 65. So we're talking 30 years. And I would throw out this whole idea of today's dollar, if it were today, how much would you need? They'd throw out a number. I said, well, that's not going to be tomorrow's dollar, because of inflation. And then we come back with this grand calculation to say, well, in order to hit this goal to where, let's say today it's 6,000, but you're going to need 12,000 a month, then this is how much you need to save. And they have to embrace that and decide, okay, I'm going to start taking active steps to saving for my future. But I never asked the question back then. I never thought well, really what causes inflation? So I think one of the hidden gems is, and I might have said this earlier, but I think it bears repeating, that understanding gold and silver is the fact that by definition, they're the only real money in the world. And they're the only ones that have store of value. And they are intrinsic, and they don't need a government in a sense to say that they're worth something. They're completely outside that system. So that's, I think, important to remember, because every currency in the world, there's been, I think, 4,800 throughout history that have had a beginning and an end. And they all have beginnings and ends because they're all put in force by a debt system. And so a hidden gem to gold and silver is if you start to own it yourself, you're finally saving for maybe the first time in your life, real money, because of that key element that the dollar does not have, and that's store value. So then by then saving that, you mentioned inflation earlier, I've mentioned inflation a few times, but you're well beyond inflation, right? As far as you said, if I'm saving in a bank, right? Traditionally speaking, nowadays, I'll speak for my bank. My bank will gladly pay me 1% if I use a traditional savings account. Some banks, it's less than that even, right?
Oh, but they'll pay typically.
Well, yeah, exactly. So they'll pay, let's say they call it 1%. But you made the point. If I'm earning 1% on my savings account at the bank and inflation is averaging 2, 3, 4, I'm losing really to that every single day.
You're losing buying power.
I'm losing buying power. And so in a sense, it almost feels a little criminal that they'd be called a savings account, because they really should be just called a money parking account, or whatever you want to call it. A
guaranteed loss account?
A guaranteed loss account. There you go. A guaranteed loss account.
We guarantee you're going to lose money with us.
Yeah, exactly.
Yeah, that would go over well. You don't want to get me started on inflation, because it's especially right now with all the corporate earnings coming out. I get really, this is a pet peeve of mine. I get steamed because we have so many people blaming the war in Iran, which it is, and tariffs for higher prices, and yet I'm seeing Fortune 500 company after company after company making record profits.
Yeah.
Well, if the costs for them are going up so much and they're only passing them along to us, how does their profits keep going at record levels? And last year, the Fortune 500 company made $1.89 trillion in profit. That is a best year ever for the Fortune 500 companies. So when you want to talk inflation, look at the people who are price gouging us.
Yeah.
That's my personal position, and that's my thoughts on it. And I've been at it for 40 years, and I've been watching it. And I'm telling you, it's not the war and it's not the tariffs. Do they have effects? Yes, they do. Is it 100% price gouging that's getting us? No, but um, it's taking advantage of those other things that are going on around the world and saying, "Well, I'm going to charge more money." There's only one company that made a mistake, and that was Steak and Shake. They did not raise their prices. They felt they didn't want to gouge their customers, so they came in with below um, expected earnings, and they got crushed in the stock market today. But kudos to them for eating it. I've heard that airlines are eating a lot of the fuel costs and not jacking prices too much because they're trying to do what they can to help out with the current situation. And as you know, I do a lot of traveling, and I'm very concerned about whether there's any jet fuel left anywhere else in the world but here. But hopefully I don't get stuck. But if I do, I'm usually in a pretty nice place. But I appreciate your time on the show. I appreciate you bringing this up about gold and silver and even helping somebody like me understand its true value. And the importance of, I think, having that as part of your portfolio, part of your investments. And when you're invested in something like that, you might keep an eye on it, but it's not money that's easily you're going to grab and go spend.
Okay.
It's stocks you can buy and sell. Um, and the risk factor for stocks versus silver and gold, it's not even worth a conversation. But again, thank you for informing us, teaching me. Uh, there's other options out there, wiser, smarter options, less risk, bigger growth. I mean, how do you beat that?
Yeah,
How do you not want to take advantage of that?
yeah,
Right?
exactly. I mean, I like to say too that, yeah, you don't, it's like you heard the old saying, you don't put all your eggs in one basket, but I'd like to
Yeah.
say that some of the eggs ideally would be gold and silver. And yeah, I mean, I really look at it, Bill, as having savings insurance, if you will, or wealth insurance. And we have insurances for all different things in life. There are for the
Yeah, we do.
ifs and there are for the wins. And to me,
Yeah,
that gold and silver are for a win, because the
it makes
system as
sense.
it says is set up there is an eventual shift that they'll have to make. They've called it many things. They'll reset. They'll call it uh, a new currency. They'll go to some form of something different, likely a digital thing at some point. So
Yeah.
that really gold and silver have never failed throughout all of history, no matter what we choose to experiment in as governments or as what is called money one day and then is all of a sudden not considered money one day, what is considered a great company one day and then disappears the next, that no matter what happens, that I think it really is God intended that gold and silver were put on earth as really a provision to help us and be there for us. And I have no doubt that they'll be here long after I'm gone. And so my goal is to pass them
You
on
and
to
me
my
both.
kids and they can keep doing
You and me
it.
both. I mean, I am a recovering financial advisor and insurance guy. So I understand that when you say that, talk about the insurance aspect. But we're not advisors. We're not licensed advisors. We're not telling people that what percentage you should have in your portfolio or anything like that. It's what you're comfortable with. And that's what I like, because I can't get involved in the stock market with $1. It's pointless. But I can with silver and gold. I love that. Again, thank you for pointing out the commonsensical aspects of investing in silver and gold. And I hope more people take a look at it. Go to sound.money website, take a look at it, replay this show so that you can get back to Tom and have a conversation with him. I guarantee you he's not selling you anything. He's providing you with logical information for you to come to the best conclusion that works for you. And that's another thing I really like about you, Tom.
I appreciate it.
Thank you for your time. I
Thank you,
do
Bill.
appreciate that as well. All right, we'll talk soon.
We'll talk soon. Thank you for having me.